Let's discuss the gasoline crisis of 2008 and commodities futures trading potential speculation. Hi, I'm Bob Knisley, perhaps better known as the Investor's Ally. That alias is explained at our website, yourinvestorsally.com. You might also know me for my second book, entitled The Wall Street Casino. In the book, we reprinted our request of June 16, 2008, to the Commodities Futures Trading Commission, as well as the SEC Enforcement Division, requesting at that time an investigation of possible speculation in crude oil contracts that could lead to the $4 plus price of gasoline at the pump. This because margin requirements were so low and supply-demand factors didn't support the price movement of gasoline. The Blade newspaper in Toledo quoted Michael Masters of Masters Capital Management in support of that premise on September 11, 2008. Please note that the email was reprinted in the book that was published in October of 2008. Now the Wall Street Journal and Business Week magazine articles quote one of the CFTC commissioners actually admitting that trader speculation caused the spike in gas prices. I emailed many regulators, and I'm sure other advisors did as well, even the SEC. But much like Bernard Madoff's scandal, I was told that the issue of crude oil prices was not within the SEC's jurisdiction. They suggested I contact the CFTC, which I did. Reprints of the series of emails appear in the Wall Street Casino book. We must ask ourselves, where were the regulators in 2008? The result of my effort was very disappointing. That was because the CFTC stated in an email on August 6, 2008, that my request was denied. They said that the Commodity Exchange Act actually states that the Commission, and I'll quote here, may not publish data and information that would separately disclose the business transactions or market positions of any person. Where then is the independent oversight? Of course, I didn't ask for that information in any event. I had requested that they investigate, not I. I just couldn't seem to get any traction, no meaningful response. They and others referred us to past investigations on the CFTC website. 2 email requests to the Office of the Inspector General were ignored, July 14th and 18th of 2008. I even telephoned the Deputy Director of Market Surveillance and 2 members of Congress without success. We emailed Attorney General Andrew Cuomo in August of 2008 without a response. Persisting further, we wrote to the Federal Trade Commission Energy Department asking which agency provided oversight of the CFTC. There was no reply. One can make a career of trying to get action from regulators and political leaders. I feel that Americans have become apathetic about these issues because there's so little regulatory interest. The Michael Masters testimony of May 20th, 2008, before the Committee on Homeland Security and Government Affairs in the United States Senate explained the problem in great detail. The testimony claimed that index speculators were indeed hoarding contract positions in crude oil as well as food stocks. That activity had the potential to drive crude oil prices to the extreme, costing Americans billions of dollars at the pump as well as at the grocery store. As a result, businesses were bankrupted, millions of jobs were lost, and the economy was thrown into an even deeper tailspin than the regulators created with their lack of regulatory oversight over many decades. Today, we Americans must be the regulators. We must be proactive to overcome both political and investor illiteracy. The job ahead now is to make sure our political leaders prosecute those responsible for any such activity. Doing so might prevent a recurrence. Please contact your congressional representative. Thanks for sharing your time.